Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Keep calm and carry on. Stocks get a bump as the Federal Reserve downplays the risks to U.S. growth and says the inflation impact of tariffs could be transitory. Turmoil in Turkey. The opposition rules out withdrawing from parliament after the detention of Istanbul's mayor rocks Turkish assets. Bloomberg learns lenders intervened as the lira plunged. The Borsa Istanbul closes down nearly 9%. Israel begins a ground incursion into Gaza, raising concerns about a return to an all-out war. The Hamas-run health ministry says more than 400 people have been killed since airstrikes began. Well, it's just gone 8 a.m. across the Emirates. I'm Jumana Bersachi in Dubai. The big focus for markets yesterday, the Fed. And what we got was not a major surprise in terms of the forecast. That we got an upgrade to the inflation forecast this year, a downgrade to growth, and the median dot still implying 2 rate cuts by the end of this year. But interestingly, though, the Fed Chair Jerome Powell did bat away a lot of people's concerns about the trajectory of the U.S. economy and indeed how the Fed might respond to tariffs, suggesting that the inflationary impact from tariffs could actually be transitory. And so steady the course is the main takeaway from the Fed meeting yesterday. And on the back of that, you did actually get a positive close to Wall Street, a very solid performance from both the NASDAQ and the S&P today, leaning towards the green as well. As you can see, both of these indices up more than 0.5%. So again, some love coming back into the tech space in the U.S. The USD also, interesting reaction there, because right after the statement came out and then subsequently throughout the course of the press conference, the dollar started to drop. And so despite the fact that they are still signaling upside risk to inflation, the reaction on the USD was pretty negative. And U.S. Treasuries are closed now for trading because of a holiday in Japan. But we also saw a rally in fixed income too. So bond yields lower, dollar lower, stock markets higher. Brent, once again in focus this morning as well. We're up 0.6%. Again, as we've been talking about the last couple of days, the situation, the geopolitical situation in the Middle East is flaring up. You don't only have the latest developments in Gaza with the beginning of another ground incursion into the Gaza Strip, but you also have had an attempted Houthi attack onto Tel Aviv. The missile was intercepted. But again, it just underscores the very precarious situation, the geopolitical situation still in this part of the world. All right, switching over, I want to take you to something else major that happened yesterday, and that was in Turkish markets. Take a look at where the lira is trading this morning, up, a weaker, 7% weaker, just on today's price action. Yesterday, plenty of volatility throughout that market on the political developments there and the fact that President Erdogan's key opposition figure got detained and he is now awaiting a sentencing. And on the back of that, you did see a huge tumult in some of these financial assets. You saw the lira drop at 1.12%, reports from Bloomberg suggesting that there was an intervention that came in to support that market. You had the Istanbul index and almost 10% weaker, and then plenty of widening in bond yields too. So we're going to talk more about that on the show. But for now, let's get back to how some of these markets in Asia are faring. Avril Hong is in our Singapore studio. And despite the green that we had for U.S. futures, the handover a little bit mixed today, Avril.
Well, we're seeing most of the region stocks managing gains. Japan, as you said earlier, is closed, but I think the Fed kind of easing some of these tariff concerns has been quite helpful. And you're seeing TAIEX, KOSPI in the green, but Chinese tech names, those are the ones that are kind of capping the gains on the region's benchmark MSCI Asia ex-Japan. As you know, the tech earnings so far this week from the Chinese names, it's been looking quite solid, maybe some lack of AI-related comments. But I think the selling for a second day we're seeing in Chinese tech might be related to some profit-taking. So that's what we're seeing in equities. But the Asia currencies are also enjoying a bit of a reprieve with the dollar continuing its slide. And the concern here is if the Fed becomes more worried about stagflation, if that's the worry that's going to morph into, then maybe these Asia currencies, the reprieve might be a bit more short-lived.
Avril, thank you so much. All right, let's continue the conversation vis-a-vis the market outlook following that Fed policy decision. Joining us now is Maurice Gravier, Group Wealth Management CIO at Emirates NBD. Maybe let's just start with the reaction to Fed Chair Jerome Powell's commentary yesterday and the fact that stocks actually did quite well by the end of the day, bonds rallied and the dollar slipped. Is this reaction justified, do you think, to what we got out of the Fed yesterday?
Yes, I think it was, because it was a kind of a no bad news is excellent news. And what I think the market appreciated is that Powell has quantified the impact of tariffs. And from what I understand, this uptick in inflation projection for this year, it includes a maximum tariff and maximum retaliation. And at the end, it's 2.8% inflation. We're not talking about 3, 4, 5. We're talking about 2.8. And within this context, the Fed would still cut two times 25 basis points. So that's very reassuring. And with regards to the growth itself, we have never been in the camp of an imminent U.S. recession. Anyway.
Yeah, but that being said, they did lower the growth forecast by 0.4% this year. Are they being too conservative given the data and the recent batch of data that has disappointed to the downside?
Yes, I think first U.S. growth had started to slow down. It's not something new. It had started in Q4. I think they are a bit conservative. You know, anyway, forecasts are a very difficult exercise. What I liked in their forecast is that they have 1.7% real GDP growth for this year with 4.4% unemployment. And I think if you have 1.7% real GDP growth with unemployment going from 4.1 now to 4.4, I think it's quite a good result. And again, it's quite reassuring.
Yeah, the market, just looking at what is priced in, is centering around a hike maybe around June. So we've got about a cut around June, a 20 basis points priced in for then. What do you think would need to happen between now and then for them to change their mind about cutting interest rates in June?
I think it's quite fair to see them cutting interest rates. You don't need to have lots of things to happen because actually the policy is currently a bit restrictive. Even, I mean, they need to see inflation rising to 2.8%. Well, their projection rising to, and still they have to cut. So they don't need much to happen. What would trigger them, I believe, would be some bad numbers on unemployment. I think it's really the point because when it comes to inflation, Chairman Powell said from now on we can hold or cut, which is in a way dovish. So we have 3 cuts in our scenario, and you know better than me that the market expectation and the Fed funds future moved so quickly. It was 0 just 2 weeks ago.
So let's talk about your portfolio allocation. At the beginning of the year, you went in, I believe, overweight duration. That has actually worked out quite well. Would you still hold bonds here, or has enough been done?
Yes, we hold on it despite not being in the camp of expecting a recession because we think first the carry is very good. Not that long ago it was the kind of level, the 4.3% that we were dreaming of. We are on our year-end fair value, so it's more a matter of a carry now. And yes, the sweet point for us is, let's say, between 7 and 10 year duration. One of the potential game changers for us, we don't know if it will happen, is if the Doge manages to materially cut the U.S. government expenses, which is something that we keep in mind.
Yeah, and you see that as a further bullish driver, obviously, from a fiscal perspective, or how do you think about it? Because it could be a negative for growth also.
Yeah, definitely. It's a complicated sequence because if this happens, it's first recessionary because the weight of the government in the U.S. economy, they're not alone. That's, in the last 20 years, the weight of government has only increased. So first it's recessionary on the GDP, but then in a second time, it's positive for growth. So it starts with making bonds great again, probably, but equity is not that much, and then you shouldn't forget to buy back the equities. I'm not saying it will happen, but we are watching that.
Yeah, bonds have always been great. Let me ask you about gold. A lot of excitement because we hit all-time record highs around $3,000. And many people that I spoke to did actually have decent exposure, had been building exposure into the safe haven. Do you think that is a trade that can continue to have legs throughout 2025, or are we running out of steam?
2025 is probably a short horizon about gold. We have a full allocation. We were overweight all of last year. We started the year neutral because, after plus 20%, we had to take some profit. The long-term story is fantastic because the gold is now the neutral reserve asset, more than the US dollar. And it's very clear in the central bank purchases. Yes. And maybe Bitcoin one day will become that or something else. But for the time being, it is gold. And even the dollar, it's volatile and it comes with strings attached when you use it.
Also the Trump administration is set on a weaker USD. So that doesn't necessarily encourage people to buy into the US dollar right now.
Yes, of course. And the status of the dollar, I mean, it's undisplaceable in the coming 5 or 10 years, but 2 decades, I don't know. So the long-term story of gold is intact. We are neutral on gold. We have a full allocation. We'll probably never go underweight, except if the US fiscal deficit was were to shrink. That's the only case that could be negative for gold.
Maurice, great to have you on, as always. Thank you so much. Maurice Gravier, Group Chief Investment Officer, Wealth Management at Emirates NBD. Thank you. Well, over in the region, Israel says it has launched what it describes as a limited ground operation in Gaza. The Israeli army says troops have retaken control of part of the Netzarim corridor to create a partial buffer between northern and southern Gaza. The operation follows this week's airstrikes across Gaza that Hamas says killed more than 400 Palestinians. Joining us now is Paul Wallace, who leads our MENA economy and government coverage. The fact that Israel are sending back ground troops into what ostensibly could be populated civilian areas directly violates one of the agreements that they came to on phase 1. So are we really in a situation now where all of the terms of phase 1, part of the ceasefire, have now just been thrown aside?
Hi, Jumani. I think so. When Israel restarted strikes on Gaza earlier this week, it effectively said the ceasefire was over and that it was no longer in place. That's what was coming out of its. That's what its officials were saying, and Hamas was effectively saying the same thing too. That this was a total breakdown in the ceasefire. So the renewed ground offensive that we're seeing at the moment, limited as it is right now, is not a total surprise, and we've got to see whether Israel decides to put in even more troops. We don't know how many they have in the Gaza Strip right now. They have amassed sort of tens of thousands of troops on the border in recent weeks, and it is possible that they put more of them into Gaza. The end goal for Israel remains the same. They want to destroy Hamas as a military and governing entity and to pressure it to release the remaining hostages. The message coming out of Israel in recent weeks from its cabinet ministers and from military officials as well has been that Hamas is not budging and that they feel this is the only way they can put enough pressure on the group to get those hostages released.
Houthis are back in the mix as well.
Absolutely.
This morning there was an attempted strike on Tel Aviv airport that was intercepted by the IDF. What do we know about those developments and how it fits into the broader picture?
So on that particular incident, according to the reports we've seen so far, it's still early days and more will come up. We don't think that missile got close to Ben Gurion or caused any damage or casualties to people on the ground. But it's a sign that the Houthis are not backing down despite these renewed U.S. strikes that began over the weekend and Donald Trump effectively saying the U.S. is going to carry them on with increasing intensity. This is something that a lot of people who've been involved with the Houthis have come to realize. You know, they've been under bombardment of one kind of another for pretty much most of the last decade. Bombardment by Saudi Arabia, by the UAE, by Israel, by the UK, by the US, and they're still standing and they're still in a very good, very strong position as far as their governance of the capital Sana'a and other parts of Western Yemen are concerned. So the message from them so far is that they don't care about the U.S. strikes. They're going to carry on trying to carry out maritime assaults in the Red Sea and obviously attacks on Israel.
In the absence of a ceasefire, obviously, that's what they say.
Yes.
Yeah. Paul, thank you so much for the reporting. Bloomberg's Paul Wallace. Now, coming up, market meltdown as President Erdogan's top political rival is detained. We discuss the financial and economic impact with Selva Demiralp from the Koç University next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkish authorities have detained President Erdogan's top political rival, Ekrem Imamoglu, on corruption charges. The Istanbul mayor was taken into custody on Wednesday, triggering a sell-off in stocks and the lira. As protesters took to the street to oppose his detention, Imamoglu posted on social media saying the will of the people cannot be silenced through intimidation. For more, we are joined by Beril Akman, our Turkish deputy bureau chief. Beril, quite astonishing to see all of the events unfold yesterday throughout the course of the day, exactly 24 hours ago. And again, a lot of question marks about exactly what was going on. But just walk us through what might happen next in the Turkish political scene from here.
Exactly. It's been a very dramatic day yesterday in terms of both markets and political developments. So what we know so far is that Ekrem Imamoglu, the main opposition politician, that's the Istanbul mayor, who's become a very formidable figure in challenging President Erdogan, is currently still under detention as of yesterday. He's being accused by the prosecutors of corruption, bribery, extortion, as well as aiding a terror group. Him and his party have denied all the allegations, and we've seen yesterday protests both at some universities led by students as well as by the main opposition party, despite a 4-day ban on protests. Today we're watching whether the opposition is going to move forward with Ekrem Imamoglu as its presidential candidate, as the mayor was just preparing to announce that in a primary on Sunday. And we're waiting to see if he's going to be formally arrested with the charges.
Yeah. So still a lot of moving parts, and a lot of that will come to light over the course of the weekend. The market reaction yesterday was also pretty extreme as well. It's coming off a period of relative economic stabilization in Turkey. But we saw a huge sell-off in the Istanbul bourse, the Turkish lira coming under a lot of pressure. What do you think this has done, the developments in the last 24 hours, to investor sentiment?
I mean, since Erdogan's re-election in mid-2023, there's been a reversal in economic program with more market-friendly policymakers, including Treasury and Finance Minister Mehmet Şimşek leading the helm to slow an inflation crisis and bring inflation down to single digits from currently 39%, and really make peace or make truce with foreign investors who have been previously disillusioned and been chased away by the former unconventional policies such as ultra-low rates. I think yesterday's events have reminded investors that there's a political risk tied to investing in Turkey. There's been a major carry trade appeal in Turkey with rates that are now up high as 42.5% at the moment, and with a relatively stable lira up until yesterday. So far, we don't see any reason why there would be a change in economic direction. Yesterday, officials stepped in to prevent the lira from further volatility, and the currency trimmed some of its losses. And so far, the statement from Mehmet Şimşek, the finance minister, has been that they'll do anything to maintain healthy market mechanisms.
Yeah, the question is whether this is going to have a lasting impact on investors' sentiment towards investing in Turkey. So something to watch over the next couple of days. Bloomberg's Turkey Deputy Bureau Chief Beril Akman, thank you. Now, coming up, President Trump's tariffs on China are having a ripple effect on emerging markets. We bring you the details next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Cheap Chinese goods are flooding emerging markets as President Trump's tariffs force manufacturers to look elsewhere to move their exports. Indonesia has lost roughly 250,000 jobs in the clothing industry over the last 2 years, while Mexico has seen large-scale job losses in its shoe and textile sector. Joining us now is Bloomberg's Asia economics correspondent, Katya Dimitrieva. Good to have you with us on the show. Fascinating big take today, because so much of what we spend our time doing is relaying back the reporting of the tariffs and the impact it's going to have on specific countries and sectors related to those tariffs. But of course, in this big take, you cite the broader ramifications for countries that aren't necessarily in the firing line, but they are feeling the indirect effects of the tariff discussion. So tell us more.
Yeah, that's right. It's not just U.S. and China, of course, because global supply chains, especially since 2018, 2019, have become so integrated, and it's actually even more so since the first round of tariffs in those years. So what we've seen since then is Chinese manufacturers and companies sending goods elsewhere. So as a share of total exports, China has been able to maintain its status and its numbers. And the reason it's been able to do that is by shipping goods to places like Vietnam, Indonesia, Brazil, Mexico. And these are all emerging markets that are currently feeling the pain, essentially, that the U.S. felt in the 90s and early 2000s when China first joined the WTO and first joined global trade and was sending goods to the U.S. and sort of creating a lot of job loss, about 2.4 million jobs lost there over 2 decades, as well as broader economic damage. And that's very similar to the picture we're seeing across the world today.
So interesting. So China has essentially found other markets to export to. But April 2nd is shaping up to be a really big day for tariffs. The reciprocal tariff day is what many are calling it. For countries who are, again, not directly on the list, will they have to end up choosing a side, whether it's U.S. or China? I mean, how are they responding to the threat of all of these tariffs?
It's very tricky for these countries to pick a side, especially when you're stuck in between the world's 2 largest economies. And on one side, you have the U.S. With President Donald Trump issuing tariffs potentially on their own economies, but also still one of their biggest customers. Of course, consumers there, ever since the pandemic reopening, have been continued to consume world goods. And so they want to maintain those relations. But also, China is a big global player. It's a biggest purchaser of goods globally for their own consumers. They have this consumer push to try to shore up that growth this year. And also, you have to remember that it's a big source of foreign direct investment into these economies, not to mention geopolitical ties in the region here in Southeast Asia. So it's going to be a very tricky time for these economies. We've seen so far countries doing things like a 7% value-added tax, very small tariffs on sort of below $50 goods imports, which is Temu and Shein. So they have some moves, but very limited.
Yeah. Bloomberg's Asia economics correspondent Katia Dimitrieva, thank you so much. And a quick look at equity futures as we head into the break. Everything is leaning towards green after the relatively benign, I would say, Fed press conference. Now, coming up, we're going to talk more about the developments in Turkey with that market meltdown. We'll be right back. This is Bloomberg. Good morning. This is Horizons Middle East and Africa. Our top stories this morning. Keep calm and carry on. Stocks get a bump as the Federal Reserve downplays the risk to U.S. growth and says the inflation impact of tariffs could be transitory. Turmoil in Turkey. The opposition rules out withdrawing from parliament after the detention of Istanbul's mayor rocks Turkish assets. Bloomberg learns lenders intervened as the lira plunged. The Borsa Istanbul closes down nearly 9%. Israel begins a ground incursion into Gaza, raising concerns about a return to all-out war. The Hamas-run health ministry says more than 400 people have been killed since airstrikes began. It's just gone 8:30 a.m. across the Emirates. I'm Jemana Versace in Dubai. Well, a positive reaction in Wall Street to the Fed, not only statement yesterday, but also press conference by the Fed Chair Jerome Powell, where he seemingly batted away some of the concerns to do with growth and the fact that they downgraded their growth outlook for this year, but also revised upwards the inflation forecast for 2025. But the Fed Chair did actually say that he thinks the impact of tariffs will be transitory. So looking through some of that inflationary potential from tariffs and what that could mean to the interest rate cutting cycle, with the median dot still projecting 2 rate cuts by the end of this year. So that was reassuring to markets. S&P and NASDAQ both trading in the green this morning, 0.5%, 0.7% firmer. The dollar losing some ground yesterday, so weakness was the theme, and that's continuing this morning, down 9 basis points. We also saw a big rally in fixed income bond yields, ending the day about 5-6 basis points lower. So again, an unwind, you could say, of some of those U.S. exceptionalism trades. Brent back in focus this morning as well, up 0.6%, above $71. Again, keeping a close eye on the developments over here in the Middle East. But switching over, speaking of political developments in the Middle East, this is the reaction yesterday to the Borsa Istanbul. This is the Turkish stock market, but here we've accounted for it in dollar terms. So the Istanbul Bourse actually dropped more than 10% in USD terms by the end of the session, which does tell you that the reaction was quite extreme across all Turkish assets yesterday to the news that President Erdogan's main opposition rival, the Istanbul mayor, had been detained. It sent shockwaves through. We saw a depreciation of the lira with some stabilization coming through from the central bank. But again, very extreme reaction. The stock market index down 11%. But it's not just the Turkish market that we're keeping an eye on. I also just want to point to one commodity that's been on our radar as well, and just wanted to flag it to you. Copper. Look at this. We have broken through $10,000 to the upside, and these futures continue to rise again on one thing only, and that is the Trump administration's comments around tariffs and the potential to apply them on copper as well. So on the back of that, we've seen copper prices continue to rise, particularly COMEX copper futures, and those are traded in the U.S. in anticipation of further tariffs. And of course, this may have an impact on inflation, which came up during the Fed conference, and Fed Chair Jerome Powell saying that the impact would be transitory. So it remains to be seen if this march higher continues. All right, let's also check in on how markets in Asia are faring. Avril is in our Singapore studio. Not so much a pretty handover today. Avril, what's going on?
Yeah, so most of the region stocks are doing okay after those Fed sort of reassurances. But the weak link is what we're seeing in China. Chinese stocks are taking a bit of a breather from their recent run-up. And if you look at the Hang Seng China, this is the picture into the lunch break. Of course, this is a gauge of Chinese shares in Hong Kong. It at one point fell 1.9%. This was the most in a week. And analysts have pointed out that maybe investors are choosing to take profit, take some money off the table in the face of these uncertainties and expectations of vol. We are still counting down to just about 2 weeks when these potential U.S. tariffs could take effect. And aside from that, it's also been a big week for Chinese tech earnings, and we're not done yet. So the idea that there's a bit of bullish fatigue, maybe Hang Seng Tech is down for a second session. Now, that being said, tech earnings have looked pretty solid so far. I think for the likes of Tencent, what disappointed some investors was its AI capital expenditure plans that, our Bloomberg intelligence colleague Robert Lee has flagged. It's paling in comparison when you compare it to the big bang sort of plans of the likes of Alibaba, for example.
Avril, thank you for the overview. Avril Hong in Singapore. Now let's turn back to Turkey, where the detention of the Istanbul mayor, who is President Erdogan's top political rival, triggered a sell-off in stocks and in the lira. For analysis, we're joined by Selva Demiralp, economics professor at Koç University. Really good to have you on today. Quite a tumultuous day yesterday in Turkish politics, and let's see how this is all going to unfold over the weekend. I know your focus is on the economy, so given how big of a reaction we got across all Turkish assets yesterday, is it fair to say that this was a massive shock to people, not just within Turkey, but also overseas as well?
Yes, I think it is safe to say that. And that's because what is happening in Turkey is going to affect international investors. And the political intervention came at a time where Turkey is trying to convince international investors in particular about the normalization process in Turkey. However, the detainment signals growing political tension and uncertainty, which raises concerns about the political direction and the economic outlook moving forward.
So we've had the central bank reportedly come in to intervene to support the currency, according to Bloomberg reporting. The finance minister, Şimşek, is sending out some positive signals, or at least trying to reassure investors that the financial functioning of markets will continue to be smooth. Is that going to be enough, though, to allay investors' concerns about what may happen next?
It doesn't seem to be, because if you look at the root cause of the problem, it is the escalation of political tension. And it seems like moving forward, political tension is going to remain escalated, at least in the foreseeable future. Even though Finance Minister Mehmet Şimşek did try to reassure investors that the economic policies will remain in place, that's not what the markets are questioning, in my view. What the markets are questioning is whether the central bank will have enough ammunition to resist against the tension and uncertainty. We have seen a major sell-off yesterday, and central bank supposedly sold between $8 billion to $15 billion. We don't know the exact numbers because the numbers will be released today. However, if there is such a large scale of sell-off in the Turkish markets, given that the central bank's international reserves have increased to only about $65 billion. Now, I'm saying only about, it's still a major progress for the central bank because they increased net reserves from negative $65 billion before the general elections all the way to positive $65 billion. Nevertheless, they sold about 15% of it in just one day yesterday. So I would assume that so long as political pressures continue, the central bank won't be able to protect the Turkish lira as aggressively as it did yesterday. And therefore, we can expect depreciation in the Turkish lira and upwards risks on the inflation rate.
Okay, that's interesting. And also how you bring it back to inflation, because the story over the last 2 years or so, or at least since the return to more orthodox economic policy in 2023, has been positive. GDP has been growing. You've had inflation finally get under control. You have the central bank talk about normalization, cutting interest rates. So it's taken a really long time to get here. And as we know, one of the big market trades for all of last year was this so-called carry trade, with investors coming in to buy front-end yields for the lucrative carry. What does this do to Turkey's long-term investing potential, or is it too soon to say?
Well, even with the turn to orthodox policies, and in Mehmet Şimşek's terms, the return to rational policies, we haven't quite seen foreign direct investment in Turkey yet. The money that is coming in is just short-term speculative inflows. And the central bank, I think, has to be more cautious moving forward in order not to spook international investors, because in order to reach to permanent or long-term capital investments, we first have to establish short-term capital investments. So at the beginning of the year, the central bank started the easing cycle, and the markets were expecting about 250 basis points rate cuts at each meeting for the until the end of the year, with the policy rate approaching around 30% and the inflation rate approaching slightly around 30 to maybe 28%. So there was going to be a positive real rate. I think the central bank will now slow down because of the inflationary pressures. And I would say at each meeting, instead of 250 basis points, now around 150 basis points is more likely, because the inflation rate most likely is going to go upwards due to the political tensions feeding into the inflation rate. But now we have to try harder to convince foreign investors in an inflationary environment with more uncertainty. Unfortunately, the costs are going to be sizable. So it's not just a domestic political event, but it has real economic consequences.
Yeah, that is clear. Selva Demiralp, we really appreciate your time this morning, economics professor at Koç University. Now for a look at some of the other stories we're following. The EU has ramped up its big tech crackdown with twin rebukes demanding Google and Apple comply with its rules or risk hefty fines. Google was warned for allegedly breaching the bloc's Digital Markets Act by favoring in-house services and its own Play Store. Meanwhile, Apple was told it must loosen controls over its iPhone operating system. Bloomberg has learned Elon Musk's social network X has raised close to $1 billion in new equity from investors at a valuation in line with when Musk took it private in 2022. Sources tell us the company is considering using some of the proceeds to pay down its remaining debt load and that Musk himself participated in the deal. Bloomberg has learned that CVC Capital Partners is interested in acquiring Fortress Investment Group as it looks to expand into private credit. The European private equity firm has held talks with Fortress and majority owner Abu Dhabi sovereign wealth fund Mubadala, but sources say the discussions are not currently active. The potential valuation of Fortress is said to be a key sticking point. And coming up, Ukrainian President Volodymyr Zelenskiy is backing a mutual ceasefire plan on energy assets with Russia following a friendly call with President Trump. The latest next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. In a call with President Trump, Ukrainian leader Volodymyr Zelenskiy has agreed to pause strikes on energy assets, echoing an agreement the U.S. and Russia made earlier this week. Trump also pledged to help Ukraine strengthen its air defense systems. Bloomberg senior national political correspondent Nancy Cook joins us for more. So before we talk about perhaps what was discussed in the phone call, I would just say the optics now are a lot better than that very fractious Oval Office meeting that took place a couple of weeks ago, with both sides saying that the phone call yesterday was actually quite constructive and positive. So does this suggest perhaps there has been a thawing of the relationship between President Trump and President Zelensky?
I think there has been, and one thing that came out in the readout of the phone call was that, President Zelensky thanked President Trump for everything the U.S. had done to support Ukraine against Russia's invasion. And Trump is a person who wants to be flattered by other foreign leaders. He wants gratitude. He wants to be seen as the alpha in every relationship. And so I think, Zelensky got a lot of advice from Trump advisors that was going to be sort of a key way to thaw the relationship. Trump does get sort of mad at people, but is willing to forgive them after he gets mad. And so I think that, Zelensky approached him likely in a different way this time.
Yeah, it appears to be the case. So let's just talk about what actually was discussed. Progress, I would say, in terms of getting towards the ultimate endpoint, which is the ceasefire. But for now, they're just still talking about targeting energy infrastructure. Do you get the sense that Trump just wants to get a ceasefire done at any cost? Or are there any specific terms that he would be looking for or any conditions attached that he think would be amenable to both sides?
I think Trump really has long fashioned himself as a deal maker and, thinks about things in 30,000-foot terms. It usually does not get sort of deep in the weeds of policy nuance, and I think that is true here. I think he wants a deal at any cost, and it doesn't necessarily matter to him if Ukraine is sort of cut out of that deal, if the deal favors Russia, sort of what the nuance or optics are like. He wants to be able to say, almost like a campaign or advertising slogan, that he's the one that ended this war or Russia's invasion of Ukraine. And so I think that this was a first step that his policy people saw, just to talk about a piece of it, the ceasefire on the energy sites. I mean, the question is, though, how long will it last? When will it actually take hold? There was reporting that suggested that Russia was still attacking Ukrainian energy sites even as this was happening. So, I think there's still a lot of details to be worked out. And I don't think that Trump, has a huge interest in protecting Ukraine over the long term.
Okay, that's an interesting point to leave it. Let me just ask you then why you think Trump is so interested in getting the ceasefire across the line. Is it because he wants to be the person that brought the ceasefire together, or is it because he would like to see a more normalization of the relationship between U.S. and Russia?
I think that he is a self-interested politician. You know, I've covered him since 2015 from Washington, D.C., and I think that he just wants to be able to say that he is the one that cut a deal. He talked about this a lot on the campaign trail, and, you know, I asked him, at different campaign events, how actually he thought that he would get a deal. He used to say, I could get a deal within 24 hours of being back in the White House. And so this is the way he talked about it. But when pressed, you know, he was never into the nuance of what that would look like, or, you know, would that mean U.S. support, or would this involve, carving up territory, or, you know, the ceasefire and energy sites. There was no policy specifics there. And that is the way that he approaches foreign policy. You know, he wants a bumper sticker statement that he's the one that cut the deal, and the policy nuances he usually leaves to other people.
Yeah, well, you seem like you know him better than anyone else. Bloomberg's senior national political correspondent, Nancy Cook, thank you so much for joining our show today. Well, Bloomberg has learned that Donald Trump has told Iran in a recently delivered letter that the nation has a 2-month deadline to reach a new nuclear accord. The revelation comes as the U.S. president increases pressure on Tehran, including through accelerated strikes on Iran-backed Houthi rebels in Yemen. Iran has denied it is pursuing nuclear arms and has refused to engage with the U.S. while sanctions continue. Taiwan has identified 2027 as the potential year for a Chinese invasion in its annual military drills. The Defense Ministry mentioned the date for the first time in documents briefing lawmakers on upcoming drills, which will simulate an attack by the Chinese military. Beijing held military drills around Taiwan earlier this week. And coming up, Kenya has missed out on $850 million disbursement from the IMF. Details on that story coming up next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Joanna Versace in Dubai. Bloomberg's been told that Kenya has failed its final IMF program review, losing out an $850 million disbursement. For more, Bloomberg's Andira Ganga joins us now. Well, I guess given everything we've discussed about Kenya, the protests, the fact that it's been very difficult for the government to push through reforms, it doesn't come as that much of a surprise. But walk us through exactly what targets they missed and why Kenya has struggled so much to meet those targets.
Hi, Juman. Absolutely. It doesn't come as a surprise. The indicators were there. If you look at something like revenue in the 2.5 years that President William Ruto has been in office, we have seen finance bill introduced every fiscal year. In 2023, we had the housing levy. In 2024, there was the proposed levies on basic goods like bread and sanitary towels. And this led to deadly protests. The government was forced to withdraw these taxes. And as a result, they lost $2.7 billion that they were anticipating to raise. When calm restored in the country, they introduced new levies. They're hoping to raise $340 million. But this is nowhere close to what they're supposed to raise. So the indicators have been there that they have not been meeting their revenue targets. Kenya Revenue Authority has missed its targets several times over and over again, despite these taxes that the government is introducing to try and ramp up revenue-raising mechanisms. Other areas in which the government lagged included reducing the fiscal deficit. While government revenue was decreasing, their spending has been growing over and over and over again. And now they're resorting to borrowing, and this is affecting the fiscal deficit. The government has also not cleared its arrears that are dating back up to 10 years, and they've been very slow in reforming state-owned enterprises that are draining a lot from the public coffers. As a result of all these factors put in together, we saw the country and the IMF decide not to move forward with the 9th review, and like you mentioned in the intro, forgo $800 million. Instead, the IMF says they've received a request for a new program, but those who understand the nitty-gritties of this program and this negotiation say that they're likely to be protracted. What's also important to know is that this government has lost whatever goodwill it had in the eyes of the public. While they've been crying foul about inheriting a dilapidated economy and empty coffers, they've been spending way beyond their threshold, and this has really angered Kenyans.
Yeah, okay, so let me just ask you on the back of that, given the government seems to be losing confidence amongst not just the public, but also investors as well, how is it impacting parts of the economy like the private sector?
That's a good question, Jumana. The private sector is feeling the impact of this regime's changes and policy measures that it's putting in place, one of them being the taxes. So Kenya has had to raise revenue to meet its IMF targets. But then again, you have the private sector saying that every single year introducing new tax frameworks is not feasible for them. It's unpredictable and it's unstable. Why? Because if you look back in December, President William Ruto signed 4 new tax laws into place, and some of them included 16% VAT on raw materials and inputs that go into making pest control and pesticides. And businessmen are saying that if you tax raw materials, if you tax intermediates, if you tax things in the value chain, then you're making Kenyan goods uncompetitive. They don't deny that the government has to raise revenue, but it has to be in a predictable and in a stable way. And Kenyan businesses seem that they can't catch a break. Initially, it was the shilling that was deteriorating. Now that it has stabilized, they have to contend with an unpredictable tax environment and energy issues. And this goes to make Kenya somewhat a little bit less competitive in comparison to its neighbors.
Yeah. Bloomberg's Ndiro Oganga in Kigali, Rwanda. Thank you so much for the reporting. Okay, a look at equity futures. We haven't spoken about the Fed in the last 20 minutes, but that was the big event yesterday for markets. Came and went, I would say, without a major shock to market participants. So by the end of the day, we saw Wall Street close up in the green. Futures all tracking green this morning, too. European futures slightly in positive territory, up about 7 basis points or so. Now, coming up in the next hour, Chris Z from BNP Paribas Wealth Management joins us to speak about the markets, and we'll speak to Georgetown University, Qatar's Mehran Kamrava on the latest in the Middle East. Stay with us. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Keep calm and carry on. Stocks get a bump as the Federal Reserve downplays the risk to U.S. growth and says the inflation impact of tariffs could be transitory. Turmoil in Turkey. The opposition rules out withdrawing from parliament after the detention of Istanbul's mayor rocks Turkish assets. Bloomberg learns lenders intervened as the lira plunged. The Borsa Istanbul closes down nearly 9%. Israel begins a ground incursion into Gaza, raising concerns about a return to an all-out war. The Hamas-run health ministry says more than 400 people have been killed since airstrikes began. Well, good morning, everybody. It's just gone 9 a.m. across the Emirates. I'm Jumana Versace in Dubai.
And I'm Jennifer Zabasadra in Johannesburg, where it's just gone past 7 a.m. Welcome to the second hour of Horizon's Middle East and Africa. And Jumana, as you were mentioning, quite a strong close for Wall Street after the Fed decision. But we still have some central bank activity that we're expecting today, and quite a bit of geopolitical developments that we got overnight that investors potentially are still parsing through.
Yeah, how could I forget? Obviously, Bank of England day, but the focus was on the Fed yesterday for markets, as you say. I think the hurdle was perhaps quite low for a hawkish surprise to come through, but somehow the Fed managed to navigate the potential hawkish messaging of higher inflation forecasts with the tone of Fed Chair Jerome Powell during the press conference, where he seemed to bat away some of the concerns about persistent inflationary shocks emerging, and saying that if they do emerge, they would be transitory, therefore suggesting that the Fed would likely look through that. The median dot still projecting 2 rate cuts through the rest of 2025. So that was reassuring to market participants, which is why the reaction for risky assets was pretty positive yesterday. That's continuing this morning with both the S&P and NASDAQ leaning towards the green. The reaction on the USD, though, negative yesterday throughout the course of the presser. The dollar getting pushed down. You could see a little bit of that this morning. It's trading on the back foot, down about 5 basis points. Also, good money pouring into fixed income. Bond yields rallying as well, another 4 to 5 basis points as that press conference continued. And then Brent also in focus this morning, back above $71. And this has nothing to do with the Fed, but I would say a lot to do with geopolitical premium and some of the disruptions that are happening in Nigeria, but also the flaring up once again of Middle East tensions, the Houthi sending missiles towards Israel. Those are intercepted, and the ground incursion into Gaza once more. So just upping the ante a little bit. But speaking of political developments within the Middle East, yesterday was a major day in Turkey. This is what we got in the Turkish lira. So this is the year-to-date performance. The Turkish lira is now 7% weaker, but that little spike up all happened yesterday on news that the Istanbul mayor, who was the President Erdogan's main political rival, got detained and is now in custody. So sent ripples through the market. Turkish lira at one point yesterday was 12% weaker. Bloomberg reported that some intervention did come through. So by the end of the day, we're about 4% weaker, but a very strong reaction there. Stock markets ending the day about 10% weaker as well. CDS trading wider. So huge ramifications on the Turkish assets. And we're going to continue following all of those developments this weekend. And just one other point that I want to draw your attention to as well, given we're talking about tariffs and the potential inflationary impact of tariff. Well, here it is at work. This is a real world impact of the talk of tariffs. Copper has broken through $10,000 to the upside in anticipation of potential tariffs on the commodity. Why does it matter? Because all of this feeds in to ultimately inflation, overall inflation. Yesterday, the Fed Chair Jerome Powell saying that they would look through it likely and then that the impact would be transitory. But of course, if these commodity prices keep rising, then there may be second round effects that central banks will have to pay attention to. All right, let's check in on how markets in Asia are faring as well. Avril is in our Singapore studio. Avril, just walk us through the price action and the handover overnight from some of these key markets.
Yeah, I think Fed Chair Powell allaying some concerns about ultimately what the impact from tariffs is going to look like is helping to support Asia's stocks and currencies. If you're looking at the Bloomberg gauge of Asia FX, excluding the yen, ticking up a little today, but you do wonder if these concerns about slowing growth, higher inflation do morph into stagflation pressures. How much longer will Asia's trade-reliant economies enjoy this reprieve? The weakling today, Chinese tech shares, the gauge of them down for a second day. And this is, mind you, in a week where we've gotten pretty solid results from the big ones, including Xiaomi and Tencent. Maybe for Tencent, the AI capex plans disappointed some, but there's also the sense of bullish fatigue, and maybe investors are waiting out for fresh catalysts. So in the meantime, they're taking profit, taking money off the table. Keep in mind as well that in the meantime, we have sources telling Bloomberg that Hong Kong could be planning margin loan caps for IPO shares amid heated retail demand. And our colleague MLive's Mark Cranfield says this might be a slight negative, but institutional investors could pick up the slack. That's the picture we're seeing in the region for now.
Thanks so much, Avril Hong in Singapore for us. We'll check back in with you in just a bit. Let's continue to get the market outlook following the Fed's policy decision. Joining us is Chris Z, head of Asia Equity Advisory at BNP Paribas Wealth Management. Chris, thanks so much for joining us. Let's just start here and get your reaction to the commentary that we did hear from Fed Chair Jerome Powell. We were saying that it's keep calm and carry on. What is your take on what he said?
Yeah, first of all, thanks for having me. So on yesterday's FOMC meeting, the biggest takeaway definitely is the maintaining the trajectory being 2 cuts for the remaining months of this year. So that's a big plus for the market, so calming a lot of the anxiety. However, on the other hand, still a bit of uncertainty, happening because if we look through the details, the Fed did cut the GDP forecast for this year as well as next year, and at the same time also hiked the inflation trajectory for this year as well as next year. So I guess still a bit of a wait and see with regards to the tariff implementation and then the inflation implications towards the whole economy.
It was strong we saw equities, at least in the U.S., closing stronger. But what does this potentially mean for EM? And I'm talking about currencies and also equities, because we did see them edging lower ever so slightly on Wednesday. Is this a net positive, or what do you see for the outlook moving forward?
We see EM, and particularly for China, we're extremely constructive because valuation really just looks right and attractive. So zeroing in on China, we very much would favor a couple sectors. Most notably would be the China tech, as well as the Chinese banks. Chinese telecom sector to me also looks interesting, particularly on the dividend yields. So Hong Kong, China, despite all the rally that we saw to date, we're still talking about low teens type of PE versus, the 20-plus PE over in the U.S. And then the growth trajectory for Hong Kong, China is back in the game. So Hong Kong, China looks the way to go.
Does that mean moving asset allocation from the U.S. then to Chinese equities, or how do you balance out considering some of those points that you were just making there?
It's an interesting point that you raised. We actually seeing a couple rotations in force, not just away from U.S., but even intra-U.S. There's some sector rotation, particularly from the MAC 7, or now it's being labeled as the LAG 7. So, the MAC 7 or LAG 7 into other sectors, including financials and selectively the healthcare sector. So these are, happening within the U.S. markets. So now if you're referring to, capital perhaps going away from the U.S., we also saw, good inflows into the European equities, given the tailwind is very, very strong and supportive, given what's announced, from Germany and continental Europe in the past couple of weeks. And certainly Hong Kong, China, as I just, alluded to, valuation just looks right.
But Chris, is tariff still a concern for you and your clients? I mean, we did hear from Chair Powell using the word, as we were mentioning there, transitory again. Is tariff, though, still potentially a concern, despite maybe the downplaying that we did get on Wednesday from the Federal Reserve Chair?
Yeah, tariff definitely, doesn't help global growth or inflation. Taking a big step back, right? But I would say China, this point in time, is probably in the best position to deal with tariff because, come on, China had been dealing with this since Trump 1.0. Now it's Trump 2.0. Right? So that's a big step back. So the further on analysis would be, with the stimulus or policies being announced by President Xi and the Chinese government is definitely very supportive. Namely, not just the triple R cuts, not just the interest rate cuts, but then we saw the consumption stimulus package that was thrown out. Extension of the old for new. New for old scheme. And on top of that, the PBOC also promised to inject billions of capitals to refi the Chinese banks, basically to withstand any hiccups ahead. So a lot of these so-called baby steps that was announced since last year are now taking toll and contributing in a nice way.
All right, we'll leave it there with you. Chris Z, Head of Asia Equity Advisory at BNP Paribas Wealth Management, joining us this morning. Thanks so much, Chris. Great to have you.
And Israel said it has begun what it described as a limited ground operation in Gaza. The Israeli army says troops have retaken control of part of the Netzarim corridor to create a partial buffer between northern and southern Gaza. The operation follows airstrikes across Gaza that the Hamas-run health ministry says has killed more than 400 Palestinians. Let's go to Jerusalem now and speak to Bloomberg's Dan Williams. Dan, a real escalation in the last 48 hours. How do we read the latest announcements and that Israel are looking to once again redeploy ground troops back into the Gaza Strip and also, more crucially, on that Netzarim corridor, which was one of the key conditions of the phase one part of the ceasefire?
Well, the Israelis made clear that they would be employing phased, increased military pressure against Hamas in what Israel says is designed to bring Hamas back to the negotiating table on terms more favorable to Israel when it comes to future hostage releases by the Palestinian group. So it began with airstrikes 3 days ago. Now we've seen measured incursions on the ground. It's worth remembering that Israeli troops and tanks never actually left the Gaza Strip during the truce that expired some 3 weeks ago. They had put peripheral positions along a de facto buffer zone inside Gaza's borders with Israel and Egypt. So what they're effectively doing is moving away from that buffer zone further into the Gazan interior. And you mentioned the Netzarim corridor. This would appear to be an attempt by Israel to reassert control over a corridor that effectively isolates the top quarter of the Gaza Strip, what has been ground zero of this war, and that might allow the Israelis to exercise control over the civilian population there, possibly even start administering food and humanitarian aid there eventually in a bid to fully replace Hamas's governance system and destroy Hamas eventually.
Yeah, but this is all coinciding with so many other developments in the region as well. Reports this morning that the Houthis sent a ballistic missile directed towards the Tel Aviv airport, Ben Gurion, that it was intercepted. What do we know about this missile, or attempted missile strike, I should say, Dan?
Well, we know, and I can tell you this firsthand, at 4 a.m. sirens sounded across the country, including the Jerusalem periphery where I live, including Tel Aviv. The airport you mentioned is on the periphery of Tel Aviv, and that was a result of a ballistic missile launch from Yemen. To my knowledge, the Houthis have not yet formally claimed it, but it would be the Houthis. They are the only relevant power there capable of deploying such weaponry. And it was quite predictable, because they've actually said now for weeks that they were willing to pitch back in this war in solidarity with Hamas, a fellow Iranian proxy, and in solidarity with the Gaza Strip, which has seen its aid imports cut by Israel as part of the Israeli pressure campaign to do with hostages. That missile was apparently intercepted safely, no damage, but definitely this will be have a disruptive effect on the Israeli discourse, with this one group 2,000 kilometers away showing that it's still in the fight, despite coming under a significant pummeling by U.S. forces since the weekend. So it would appear that the Americans, and President Trump has spoken about this, will be increasing their own pressure on the Houthis, with Trump saying that any such attack should be seen as an attack by Iran itself. So with this latest attack, the sirens sounding across central Israel, I expect there'll be simply more attacks on the Houthis by the Americans, perhaps even Israel joining in this time.
Dan, thank you so much for the reporting. Bloomberg's Dan Williams in Jerusalem. Now, coming up, a market meltdown in Turkey as President Erdogan's top political rival is detained. We get more details on what it all means next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Turkish authorities have detained President Erdogan's top political rival, Ekrem Imamoglu, on corruption charges. The Istanbul mayor was taken into custody on Wednesday, triggering a sell-off in stocks and the lira. As protesters took to the street to oppose his detention, Imamoglu posted on social media saying the will of the people cannot be silenced through intimidation. For more, we're joined by Beryl Akman, our Turkish Deputy Bureau Chief. Daryl, quite a dramatic day that we saw on Wednesday. Talk to us about what happens next, your expectation for today, and also the future for Imamoglu.
I think, first of all, what we're looking at is what's going to happen to Imamoglu, who was set to announce his presidential candidacy on Sunday in his party's, the main opposition, CHP's primary. The main opposition party has said that they will go ahead with the voting, and so far we haven't seen an alternative candidate to Imamoglu. Of course, we're also waiting to see whether he'll be formally arrested on the charges, the corruption charges that you mentioned. In terms of the markets, we're going to see whether the rout of yesterday is going to continue today. I think based on what investors said yesterday, that the risk had been repriced, we won't see as much of a dramatic meltdown as yesterday, but I would say that with caution. We're also following what President Erdogan is going to say about the issue. In a speech yesterday, he did not mention Imamoglu's detention. He's set to have a meeting with his party members today, and we'll be monitoring whether he speaks on this.
And Beryl, based on the discussions that you are having with investors and analysts, I mean, is there still concern in the markets about what potentially could come next for Turkey and also for the lira? Because as you were mentioning, you know, touching a new all-time low on Wednesday.
Absolutely. We've seen in the past other currency crises, much worse in 2018, 2021, some related to political developments. So I think investors who have money invested in Turkey know there's a political risk that comes with being here. In terms of, I think what they're looking at today is whether, and in the future, is whether, there's going to be a policy direction in the economy. We've seen since Erdogan's re-election in mid-2023 a policy overhaul where he brought in more market-friendly names who helped bring in a truce with disillusioned foreign investors and try to contain the inflation crisis. We've seen rates jacked up to as high as 50%, and that's brought in a carry trade appeal. So far, there's no concern that the economic policy will change, but whether there's going to be spillover from the political developments and whether these events we've seen will escalate further, that might have an impact, and we'll definitely be following their potential impact.
Certainly appreciate all your reporting there. Bloomberg's Turkey Deputy Bureau Chief Beryl Akman joining us there. Thanks so much, Beryl. Now, coming up, Steve Witkoff says he thinks Vladimir Putin is acting in, quote, good faith following talks between the Russian leader and Donald Trump. More from our interview with the White House Special Envoy next. This is Bloomberg.
White House Special Envoy Steve Witkoff says he thinks Vladimir Putin is acting in good faith following talks between the Russian leader and Donald Trump. Witkoff told Bloomberg that Putin gave a direct order to his troops to not attack Ukrainian energy facilities after his phone call with the U.S. president. He spoke to Bloomberg Surveillance. Take a listen.
What was agreed between the two presidents was, and it was at President Trump's suggestion, that there be a cessation of attacks on energy infrastructure from both sides and civilian infrastructure for that matter. Also, working towards a Black Sea moratorium on hits on naval vessels and freighters carrying grain and things of that sort, and ultimately that would evolve into a full-on ceasefire, which is a bit more complicated because there's a 2,000-kilometer border, there's Kursk, and there's a lot of details that go into that. But with regard to your question on some of the reporting with regard to the Russian drones last night, I have it on good information from a telephone call I had before I went on this show that President Putin issued an order within 10 minutes of his call with the president, directing Russian forces not to be attacking any Ukrainian energy infrastructure. And any attacks that happened last night would have happened before that order was given. In fact, the Russians tell me this morning that 7 of their drones were on their way when President Putin issued his order, and they were shot down by Russian forces. So I tend to believe that President Putin is operating in good faith. He said that he was going to be operating in good faith to the president yesterday, and I take him at his word.
So, Mr. Witkoff, is your understanding that as of today, energy facilities, energy infrastructure will be off limits?
That's my understanding, yes, ma'am.
Do you think the next stage potentially, as we get the roadmap towards a 30-day full ceasefire, potentially geography should be off limits, like drones hitting Kyiv?
You know, I can't speak to that. I think the idea behind a 30-day ceasefire, first of all, we made more progress yesterday than has been made in the last 3.5 years. The two leaders actually talked and committed to cessation of attacks on energy infrastructure and civilian infrastructure. They talked about reviving the Black Sea maritime agreement that had been negotiated several years ago and never really implemented. Those are monumental things, and they're trust-building things as well. And I think beyond that, they also went into how you would put the finishing touches on a full-on ceasefire. That full-on ceasefire has a lot to do with this 2,000-kilometer line that the where the Ukrainians are lined up against the Russians. It's complicated. There are different battlefield conditions in various spots. That's for the technical teams to figure it out. And they're going to be meeting in Saudi Arabia, I believe, beginning Monday and Tuesday. So lots of progress happened yesterday, and it happened in large part because of President Trump.
That was Steve Witkoff, White House Special Envoy to the Middle East and an advisor to President Trump, talking through the latest phone call between President Putin and Trump. Now, coming up, as South Africa's inflation holds steady, we'll look ahead to today's central bank rate decision. That's next.
This is Horizons Middle East and Africa. Our top stories this morning. Keep calm and carry on. Stocks get a bump as the Federal Reserve downplays the risks to U.S. growth and says the inflation impact of tariffs could be transitory. Turmoil in Turkey. The opposition rules out withdrawing from parliament after the detention of Istanbul's mayor rocks Turkish assets. Bloomberg learns lenders intervened as the lira plunged. The Borsa Istanbul closes down nearly 9%. And Israel begins a ground incursion into Gaza, raising concerns about a return to all-out war. The Hamas-run health ministry says more than 400 people have been killed since airstrikes began. It's just gone past 7:30 a.m. in South Africa. I'm Jennifer Zabasaja in Johannesburg.
And I'm Jumana Versace in Dubai, where it's just gone 9:30 a.m. Welcome to Horizons Middle East and Africa. Well, there's geopolitical developments, but then also lots of market developments as well, Jen, with the Fed being the big one yesterday and a whole bunch of other central banks to watch out for today as well.
Yeah, including the BOE, of course, Jumana. And here in South Africa, we're paying close attention to the South African Reserve Bank, which we're going to speak about in just a bit. But let's just take a look at where markets are positioned, how investors are digesting and parsing through a lot of the different news items and investor items that are mentioning. Let's just start with U.S. equity futures right now, up just over 0.6%. That even coming, as we were mentioning at the top of the show, we did get a hold from the Fed, but still forecast potentially could be seen as potentially bearish for equities. And yet we did see all the major indices in the U.S. closing in the green right now. Tech stocks were really leading the charge on Wednesday. As we can see, though, NASDAQ futures up just about 0.6%. As I was mentioning there, we are continuing our central bank theme throughout the week and paying close attention to what is going to happen with the South African Reserve Bank, which is why we're watching closely what is happening with the rand. The rand is quite steady right now, as you can see, against the dollar at about 18.12. Inflation here in South Africa came in yesterday well below the SARB's target range. But of course, we did get the decision from the Fed. The SARB follows very closely, or at least pays very close attention to what the Fed does. So we're watching closely what the price action looks like for the South African currency. Gold is also in focus for us, hitting another record, pulling largely unchanged right now, as you can see right there, at about 3,047.72, fluctuating a bit an ounce there. We did see a friendly call, though, between U.S. President Donald Trump and, of course, Ukrainian President Zelensky, potentially talking about this ceasefire. Could mean less safe haven demand, though we are still seeing gold climb about 16% since January, continuing to extend its strong gains from last year. And Brent crude up just about 0.5% there, about $71.14 a barrel, paying close attention to the decision by OPEC Plus and also U.S. tariff policies potentially contributing to what many analysts are calling an already oversupplied market as we see it there for oil. Finally, let's just dig a little bit deeper into the Fed decision and the dot plot, which is what we were talking about on Wednesday. The dot plot still remaining the same, calling for two 25 basis point cuts this year. But still, as this chart is showing, we did get some updates to the unemployment unemployment rate and also inflation skewed towards the upside. And this is similar to what we did see in 2022 when we did see the Fed raising rates aggressively. And yet we still heard from Jerome Powell saying that potentially the risks right now are inflation is transitory. But this is just a look at what some of the commentary that we did get from the chairman on Wednesday. Let's, though, check in on how markets in Asia are faring at digesting a lot of this news. Avril Hong is standing by in our Singapore studio with quite a lot of red on the board. Avril, what are you watching?
Yeah, the red is in relation to currency gains in the region, a sense of relief in this part of the world as the Fed kind of signals that it can still cut this year, allaying concerns about growth. And you're seeing mostly gains among Asia currencies, including the Indonesian rupiah, which was on a 3-day slide. Some of this related to growth, fiscal discipline concerns. Of course, BI left rates unchanged just a day ago. That's Bank Indonesia, the central bank there, and it is actually leading gains in Asia FX today, the rupiah. We're also seeing the Korean won looking quite stable, and that's despite some headlines that opposition lawmakers were kind of trying to impeach the acting president. And I think it was the likes of Mizuho that highlighted that for EM currencies, they do at the moment seem more sensitive to political headlines. And I guess that feeds into the allure of the Japanese yen, as the likes of ANZ flags that, you know, given these concerns about the US growth outlook, that could actually benefit the likes of the Japanese currency. The outlier today in Asia Pacific currencies is the Aussie dollar after weak jobs data. Employment fell, and this was despite expectations of a gain. And if you're looking at money markets, I think they're pricing in roughly an 80% chance of a cut in May. So this is the picture after the Fed in Asia currencies.
Avril, thank you so much. Avril Hong in Singapore. Let's return to one of our top stories. Israel says it has launched a limited ground operation in Gaza. The Israeli army says troops have retaken control of part of the Netzarim corridor to create a partial buffer between northern and southern Gaza. The operation follows this week's airstrikes across Gaza that Hamas says killed more than 400 Palestinians. To discuss further, let's speak to Mehran Kamrava, government professor at Georgetown University, Qatar. Good morning to you.
Good morning.
Well, things have really deteriorated in Gaza. The situation has got a whole lot worse in the last 48 hours. The resumption of airstrikes and now also the resumption of what Israel are calling a limited ground incursion back into the Gaza Strip. What options are there right now to de-escalate the situation?
There aren't really many options to de-escalate, and this catastrophe continues to get worse. The only option, the only consideration right now is domestic Israeli politics. And that's what really is driving Netanyahu. You know that he has been in an incredibly tense conflict with the head of the domestic Israeli intelligence agency, Shin Bet. He is trying to, on the one hand, satisfy the right flank of his cabinet, and also consolidate his own position. But at the same time, he's been emboldened by statements coming out of the White House in the United States. And so really, there's no option other than what Netanyahu decides to do next.
Yeah. Okay. So Israel are saying that they're going to keep going until all the hostages are released. It's estimated that it's believed to be there around 58 or 59 hostages still with Hamas. Unclear how many of them are still alive. Why does Hamas not release the hostages despite international pressure and increasing amount of pressure from the U.S. on that front?
From Hamas's perspective, the hostages or bodies of hostages are the only bargaining chip that it has. And Hamas figures that if it were to give that up, it would have absolutely no way to counter any Israeli action or any Israeli initiative. And if there's any pressure on Netanyahu now, it is from families of hostages, remaining hostages who want their loved ones freed. And so if Hamas were to give that up, they figure they'd have absolutely no bargaining chip with Netanyahu.
But at the same time, you listen to the language coming out of even Arab states, and many of them are saying, even publicly or behind closed doors, that they don't believe that Hamas should be in a position to govern the Gaza Strip once the war is finally over and you can talk about rebuilding and reconstructing. So therefore, what pressure can the Arab states also exert on Hamas?
That's an excellent question. I think the only Arab state that really is in a position right now to exert some meaningful pressure on Hamas is Qatar, because it's and Egypt, because they're the only two states that are really continue to be involved in negotiations. And so Saudi Arabia, United Arab Emirates, by the fact that they have really painted Hamas as a terrorist organization, they've really pulled themselves out of the equation. And so if Egypt and Qatar were able to dangle some assistance in terms of humanitarian relief or some other kind of assistance, then I think there would be pressure on Hamas. But I think your question points to a bigger problem that Hamas has, and that's the extent of its popularity, which we really don't know. I think Hamas will have to answer for its own actions on October 7, 2023, before the Palestinian population.
Yeah, most definitely. Look, I just want to end with a final question about the Houthi file, because they say that they're flaring things up again in solidarity with the Palestinian cause. The Trump administration has a different perspective, and they said that any attack from Houthis would be akin to an attack directed from Iran. They're closely linking it to Iran. What do you think is driving the Houthis here? Is it in solidarity to the Palestinian cause, or is it still acting as a proxy to Iran's goals in the region?
Yeah, Iran's relationship with the Houthis has been incredibly complicated and very blurred, so we don't quite know the answer to that important question. But I think right now, the last thing Iran wants is to antagonize Trump. And there are very delicate maneuvers and dances going around the edges by both Iran and the United States over the nuclear issue. So I sincerely doubt if the Iranians are telling the Houthis to flare things back up. The Houthis really are in many ways independent agents, and they're the ones who have declared solidarity with the Palestinians, and they're really in many ways thumbing their nose at the Americans, saying you can attack us, but we're still going to demonstrate our solidarity with the Palestinians.
Yeah. Great to have you on. Thank you for articulating your views and the analysis. Mehran Kamrava, Professor of Government at Georgetown University, Qatar.
Let's turn to the region here. South Africa's inflation rate flatlined ahead of a widely expected interest rate pause. The consumer price index rose 3.2% in February from a year earlier, the same as the previous month. The reading may keep speculation alive of an interest rate cut in the first half of this year, although most economists expect the MPC to leave rates on hold today. Fortunately for us, we have Yvonne Mango from Bloomberg Economics joining us here. So, Yvonne, thank you so much for your time. There seems to be quite a split about what could happen today. What is your expectation and why, if you could explain?
Yes, as you rightly mentioned, about two-thirds of the analysts polled by Bloomberg expect no change to rates, while a third expect a cut, including us as Bloomberg Economics. Our view is that inflation is at the lower bound of the inflation target and should remain in the lower half of that target range for the remainder of the year, giving room for the central bank to cut. However, for those who are expecting no change, the main reason for that is they expect the central bank to err on the side of caution, given the heightened global uncertainty that we're experiencing now, and to rather hold.
Well, and we have seen Governor Kamrava of the Reserve Bank err on the side of caution, mostly. Is there a fear, though, of being a little bit too cautious at this point in time, considering what the state of the economy is?
Not at this stage, given that growth, as your way, is picking up.
Yeah.
So that shouldn't play a significant factor in terms of their decision. But I think what they're following right now is the global trade war, what the tariffs could mean for inflation going forward, and also awaiting some significant decisions, such as the 2nd April, when we see the United States impose tariffs in several countries, and what that could mean. So I think there's a wait-and-see approach that the central bank would likely take ahead of making a decision going forward.
How much does the U.S. decision by the Fed potentially impact what we hear from Kanyako today?
Kanyako will tell you that, yes, while they observe it, they tend to observe domestic factors more highly in terms of what that means going forward. So they'll look at the inflation trajectory going forward while keeping an eye on what's happening at the Fed.
Okay, we'll leave it there. We'll leave it there for you. Yvonne Mango from Bloomberg Economics. Yvonne, always great to get your your insights on. Thank you so much for joining us. Now, coming up, Abu Dhabi forges a $25 billion U.S. partnership to invest in power generation for AI projects. The details on that next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Abu Dhabi's sovereign investor ADQ is forging a $25 billion U.S. partnership to invest in power generation for data centers and artificial intelligence projects. The move comes after U.S. President Donald Trump hosted a top royal from the Emirates. Let's get more from Bloomberg's Anthony DePaulas. We don't know if this is coincidental because Sheikh Tahnoun was just in D.C. as we were reporting. But tell us, what do we know about ADQ and this potential investment?
Yeah, this is a deal between ADQ, as you say, which is an Abu Dhabi sovereign fund, which is controlled by Sheikh Tahnoun, and Energy Capital Partners, which is a U.S.-based investor owned by London-listed Bridgepoint. So they're getting together. It's a $25 billion fund that they see at the moment, looking to invest in about 25 gigawatts of power to run data centers, to run hyperscalers, basically for the AI space. So they want to get into that. The partner said they're going to put an initial $5 billion into that project, and they are looking to start up, even signing up within a year, about 10 gigawatts of power. So really starting off on that, and then trying to deploy all that capital, by the end of this decade, within the next 5 years, really, and then they could even go farther from that if there's more demand.
How does it fit into UAE's broader vision of what they want to do with the economy? Is this part of the vertical of investing into AI, or is it part of the vertical of investing overseas into the U.S.?
Yeah, well, both, really. I mean, the UAE is going all in on both of those, AI at home, abroad, and using also the energy aspect of the UAE to invest abroad. So they are really going into energy for powering some of these data centers. Some of these facilities will be captive only for data centers. At the same time, like you said, Sheikh Tahnoun is there having a wide-ranging discussion with the U.S. They were in the Oval Office on Tuesday evening, talking to President Trump about defense, about AI, about allowing more UAE investment into the United States. And so we've got other companies there as well. MGX, which is another Abu Dhabi fund, has signed up with companies like Microsoft to go in on a $30 billion plan for some other power to run data centers. There's another $100 billion plan, this Stargate plan that President Trump has announced, which MGX is also involved in terms of AI. So they're really going into that. And let's not forget, ADNOC, the CEO, Sultan Al-Jaber, is still in Washington on the Tahnoun visit. He was at CERAWeek last week talking about their new investment company, XRG, which we reported on wants to get into natural gas in the U.S., again, to power AI. So they're really bringing this financial heft, the energy, and the AI all together in one package.
Yeah, and indeed, I think in the readout from that dinner that was held between President Trump and Sheikh Tahnoun, they said that they were talking about closer technology and energy cooperation. So there they are. They're bringing it together. Anthony DePaula, thank you so much. Bloomberg's Anthony DePaula, Middle East energy reporter. Now, Bloomberg has learned that billionaire Gautam Adani is in advanced talks to buy the Indian unit of Dubai-based developer Ahmad Group at a potential enterprise value of $1.4 billion. According to our sources, the two sides are discussing the structure of a transaction, which could include an Adani unit injecting about $400 million in equity. And coming up, EU leaders gather to discuss defense spending and support for Ukraine today. We are live in Brussels with the details next. This is Bloomberg.
Welcome back to Horizons Middle East and Africa. I'm Jennifer Zabasaja in Johannesburg. Ukrainian President Volodymyr Zelenskiy has agreed to a proposal for a mutual halt to halt strikes on energy assets. It's an initial step in U.S. President Donald Trump's effort to end the war that began with Russia's invasion 3 years ago. It comes as EU leaders are set to meet in Brussels today. European defense and support for Ukraine among the major issues on the agenda. Bloomberg's Oliver Crook joins us now. Oliver, Trump's been speaking to both Putin and Zelensky this week, but still, EU leaders ahead of their summit today appear to be slightly sidelined. What's the expectation for the meeting today?
Yeah, as ever, I think that the European leaders are still grappling with this sort of new reality of a Trump presidency and what it means for the geopolitical order and what it means for their role on the global stage, and really basically grappling with the reality that unless you have a sort of potent military force and you're an actual sort of power broker you're not going to get a voice at the table. And that is something that they've been dealing with for a number of weeks now. It is something that is going to sort of crystallize again a little bit later today. What they have been forced to do is just to give some commentary from the sidelines, trying to come up with their own sort of plans. I mean, we've been talking a lot about the sort of issue, the plans that have been spearheaded by Keir Starmer in the UK and Emmanuel Macron in France, the so-called coalition of the willing. And this is really sort of an arrangement of different countries across the world that basically after a potential ceasefire, potentially after a peace, would be willing to continue to support Ukraine. Because, of course, this is one of the great demands of Donald Trump, is that basically Europe needs to take more of its own sort of security at the very center of its own responsibility, rather than relying strictly on the American nuclear security umbrella, but of course all the other sort of military capabilities that the U.S. provides. So that will be one of the main topics today. What we're going to also get is progress on the sort of concrete steps that were proposed by Ursula von der Leyen a couple of weeks ago. This is the Rearm Europe plan. This is a plan that involves 150 billion euros worth of loans. We're talking about expanding the mandate for the European Investment Bank so that you can invest and loan to just strictly defense companies. And this is all just different ways to try to unlock more money for European defense. And we should say critically, something that the French have been pushing is to buy these European products rather than relying on the United States. A lot of the people I've interviewed over the last couple of weeks and months won't say it out loud. We heard it out loud from the French finance minister earlier this week, that basically when you buy from the United States, there are strings attached. And in a new reality, that means that you're not as secure when you're buying military hardware from the United States. So they need to source it more and more within Europe.
Do you see, Oliver, defense spending really as the second priority item for the summit for leaders, or what else do you think potentially will take precedent?
I think defense spending is number one across the board, because even when it comes to supporting Ukraine, unless the Europeans are basically spending more on defense, they're basically powerless to do so. So I think that will be number one. There will be more discussions potentially on potential further sanctions that they could put on Russia, because this is really the only chip that the Europeans have, are these huge sanctions that they have against Russia. The other issues, and Jen, we'll find out if they have time to get to these. There's also the perennial issue of European competitiveness. This is supposed to have been the sort of main issue for the European Commission this year, is obviously now being eclipsed by sort of tariffs and the Trump administration. So we expect to hear about sort of economic policy, potentially on competitiveness and tariffs, and of course trying to make progress on some of these big initiatives that would help unlock some of the European sort of fiscal power and sort of the capital markets union, for example. So these are all things that we are expecting to hear potentially from if they get around to it. But Jen, I think number one, front and center, is going to be defense spending here for European leaders.
All right, Bloomberg's Oliver Crook there. Thanks so much, Oliver. Great to have you on. Let's just take a quick check at markets. We are still seeing some green, at least for U.S. equity futures. That coming after the Fed decision helped many of the major indices to close in the green. Eurostock 50 futures largely unchanged, but we will wait to see how the day's events potentially affect that. That's it for Horizons Middle East and Africa. I'm Jennifer Zabasaja in Joburg with Jumana Bersechi in Dubai. Stick with us for Daybreak Europe. This